Look, I need you to forget everything you think you know about AI stocks for the next 8 minutes. Because right now, in 2026, we're watching one of the most insane valuation divergences in tech history. On one side, you've got Palantir trading at a $400 billion market cap with a price-to-sales ratio that would make even the most degenerate 2021 investor blush. We're talking 67 times sales. On the other side, Snowflake is sitting at what looks like a bargain valuation. But here's the problem. It might be the textbook definition of a value trap. This isn't just another growth stock comparison video. This is about two companies that were supposed to dominate the AI revolution, but only one of them has actually delivered. The other? Well, it's bleeding market share to Databricks and Oracle, while Wall Street pretends everything is fine. So here's what we're doing today. We're going deep into the 2026 numbers, the products nobody's talking about, and the one partnership that completely changes the narrative. By the end of this video, you'll know exactly which stock is the real play, and which one is about to trap retail investors for the next 3 years. Let's get into it. First, let's talk about why PLTR is even at this absurd valuation. And it all comes down to 3 letters: AIP, the artificial intelligence platform. When Palantir launched AIP in 2023, the market was skeptical. Another AI wrapper, they said. Just hype, they said. Fast forward to 2026, and AIP is generating revenue numbers that are frankly disgusting. We're talking about a 121% year-over-year explosion in US commercial revenue. Not international, not government contracts riding on legacy deals. US commercial, the hardest market to crack. Here's what's actually happening. Palantir turned AIP into an ontology-based decision engine that doesn't just analyze data. It operationalizes it in real time across an enterprise's entire tech stack. They're not selling analytics dashboards. They're selling competitive advantage as a service. But here's where it gets really interesting. In Q1 2026, Palantir quietly rolled out 2 products that are absolute game changers. AI Hivemind, a multi-agent orchestration layer that lets enterprises deploy hundreds of specialized AI agents that communicate and make decisions autonomously. Think of it like giving every department in a Fortune 500 company its own AI brain, but all the brains are networked together. Edge Ontology. This is the scary one. Palantir is now deploying their Ontology framework directly to edge devices in manufacturing, defense, and logistics. We're talking real-time decision-making at the hardware level. No cloud dependency. The Pentagon is already running this in classified applications. The market cap makes more sense now, doesn't it? Because Palantir isn't just riding the AI wave, they're building the infrastructure that makes AI actually useful at scale. Now let's flip to Snow, because on paper, they should be winning too. Snowflake's transition to Cortex AI, their AI-native data cloud platform, shows real promise. They posted 37% growth in remaining performance obligations, totaling $7.9 billion. That's not nothing. That's a massive pipeline of contracted future revenue. But here's the issue. Growth is cooling fast. And when you're in a market where Databricks is eating your lunch on the data lakehouse side, and Oracle is undercutting you on price with autonomous databases, 37% growth starts looking like the beginning of a long, painful descent. The institutional money knows this. That's why the valuation compression has been brutal. But wait, because there's one thing that changes this entire narrative, and it's something 99% of retail investors completely missed. In March 2026, Palantir and Snowflake announced something that shocked the market: a strategic interoperability partnership that bridges Palantir Foundry with Snowflake's AI data cloud. On the surface, this looks like cooperation. 2 giants playing nice, creating value for mutual customers. But if you understand enterprise software, you know exactly what this is: a keep your enemies close move. Palantir gets access to Snowflake's massive data lake footprint without having to build storage infrastructure. Snowflake gets to claim they're AI ready by integrating with the best ontology platform in the market. Both companies get to upsell to each other's customers. But here's the real play. Palantir is using this partnership to Trojan Horse their way into every Snowflake deployment. Once AIP is embedded in a Snowflake environment, guess which platform becomes mission critical? Hint, it's not the one storing the data. This is the frenemy playbook perfected. And it's exactly why Snowflake's long-term competitive moat is eroding faster than their earnings reports admit. Now, here's the part where I tell you why I'm not buying the Palantir hype yet, despite everything I just said. Go to page 42 of Palantir's latest 10Q. Buried in the footnotes, you'll find their stock-based compensation numbers. In 2025 alone, Palantir issued $1.2 billion in SBC. That's nearly 30% of their revenue being paid out in diluted equity. This is the secret metric Wall Street doesn't want retail to focus on. Because when you're trading at 67 times sales, and 30% of your revenue is just accounting magic from SBC, your profitability starts looking a lot less impressive. Meanwhile, Snowflake's SBC is around 18% of revenue. Still high, but not insane. And their free cash flow margins when you normalize for SBC are actually better than Palantir's. This is the risk nobody's pricing in. PLTR could be the most overvalued, profitable AI stock in the market right now. And when the music stops, retail is going to be left holding the bag. So who wins? Palantir or Snowflake? Here's my take, and it's probably going to piss some people off. Palantir wins on execution. Snowflake wins on risk to reward. If you're asking which company has the better product, the better growth trajectory, and the better competitive positioning in 2026, it's Palantir, hands down. AIP is the real deal. The government contracts are a fortress moat. The US commercial growth is undeniable. But if you're asking which stock gives you better upside from today's prices, that's Snowflake. Because here's the thing. Palantir at a $400 billion market cap is priced for absolute perfection. Any stumble, any quarter where AIP growth decelerates, any government budget cut, any SBC scandal, and this stock gets obliterated. You're paying for 2030 earnings today. Snowflake, on the other hand, is already priced like it's dead. The market has written them off. Databricks is going to crush them. Oracle is going to steal their customers. AI is going to commoditize data warehouses. But what if they're wrong? What if Cortex AI actually works? What if the Palantir partnership accelerates their enterprise AI adoption? What if they stabilize growth at 30% and start converting RPO into actual revenue? Then you've got a stock trading at 8-10 times forward sales with 30% growth and improving margins. That's not a value trap. That's a coiled spring. So here's my play. If you want to own the winner of the AI infrastructure war, you buy PLTR, but you do it with the understanding that you're paying a massive premium and your margin of safety is zero. If you want asymmetric upside with manageable risk, you buy Snow. But you need to stomach the volatility and accept that this could take 12 to 24 months to play out. Me? I'm not touching Palantir at these levels. I don't care how good the story is. 67x sales is insanity. I'd rather bet on the contrarian play, the stock everyone hates, and wait for the market to wake up. Because in 2026, the real alpha isn't in chasing the $400 billion bubble. It's in finding the $50 billion company that the market forgot how to price. That's it for today. If you made it this far, drop a comment and let me know. Are you Team Palantir or Team Snowflake? And if you found this useful, smash that like button and subscribe, because we're doing deep dives like this every single week.